All right, diving into Rivian's Q4 2024 earnings call. Lot to unpack here.
Yeah, they hit positive gross margin this quarter. A pretty big deal, especially for, a newer EV company.
It's true. It really shows they're transitioning, from just producing to actually making a profit, which is ultimately what investors are looking for. So what drove this positive margin?
Well, their production costs are down significantly, $31,000 less per vehicle year over year.
Yeah,
That's pretty substantial. And their revenue per unit is also up, thanks in part to that new tri-motor configuration for the R1. Seems to be pretty popular.
So kind of like hitting it from both sides.
Yeah.
Cutting costs and raising revenue, win-win.
Definitely a good combo.
And speaking of the R1,
Yeah.
it snagged some pretty impressive safety awards, yeah.
Oh, yeah, both the R1S, the SUV, and the R1T truck got the highest safety rating, the top safety pick plus from the IIHS. And notably, the R1T is the only electric pickup to get that. And the R1S actually is the only large SUV, even including gas-powered ones, to earn that rating.
Wow, adds a whole other level of appeal, especially in a market where safety is, top of mind for a lot of people.
Absolutely.
So let's shift gears a bit to the R2, their upcoming, more affordable model. What's all the buzz about?
Well, it's going to be much more accessible than the R1, price-wise, obviously, which should open it up to a much wider customer base. And they got to that lower cost structure, through some clever design choices, consolidating parts, and just more efficient manufacturing overall.
So it's not just stripping it down to the bare bones. They're really engineering it to be affordable from the ground up.
Exactly. And that really ties into their larger focus on vertical integration, especially when it comes to software and self-driving tech. They've totally revamped their autonomy platform, going with an end-to-end approach with AI at the core.
So they're basically taking the reins, right? Not relying on third-party solutions.
Yeah, pretty bold move.
Can you unpack that end-to-end approach a bit more? Why is it such a big deal?
Sure. Basically means they're handling, every part of the self-driving system, from the hardware, like cameras and sensors, to the software that's processing the data and, ultimately making the driving decisions. Having that level of control lets them really tailor the system to their specific needs, to their vehicles. And, that could give them a real edge down the line.
So they're kind of building their own ecosystem almost.
Yeah.
Which is fascinating. And this whole software and services push, it's also why they decided to break that segment out as its own reporting unit, right?
Yeah, it gives more transparency into their revenue streams, which now include things like remarketing, repair services, charging, software subscriptions, and of course, that joint venture with Volkswagen.
Oh, right. And speaking of the joint venture, that's projected to bring in some serious cash, isn't it?
Oh, yeah, expecting it to generate about $2 billion over the next 4 years, which is, going to be a big boost. And what's really interesting is that this software and services segment, it's already profitable, 28% gross margin in Q4.
That's pretty remarkable, especially for a newer area of focus for them. Seems like they're really firing on all cylinders. So what about their overall financial picture?
Well, their adjusted EBITDA loss improved significantly to $277 million in Q4. That's their best performance since they started production, which is a really positive sign. They're definitely moving toward, sustainable profitability.
Encouraging for investors.
Yeah.
And their cash position seems pretty solid, too.
Oh, yeah. Ended the year with $7.7 billion in cash, including $1.3 billion from that Volkswagen deal. And they're also expecting a big chunk of change from a Department of Energy loan, which could be up to $6.6 billion. That's going to give them a huge financial cushion, let's put it that way.
Yeah, no kidding. So they've got the resources to really execute on these plans.
Yeah.
What's the outlook for 2025?
Looking at deliveries between 46,000 and 51,000 vehicles, which is, quite ambitious.
That's a lot of vehicles. And there's a planned shutdown of the normal factory in the second half of the year, right? What's the deal with that?
Right. That's all about getting ready for R2 production. It's a strategic move, taking a short-term hit to make sure that R2 launch goes smoothly.
Makes sense. Playing the long game.
Okay.
Now, they did mention some uncertainty around the regulatory environment, especially when it comes to incentives and tariffs. How might that affect things going forward?
Yeah, it's definitely something they're keeping a close eye on. They've factored in some potential impacts, which could be in the hundreds of millions of dollars, into their guidance. But, it's a constantly changing landscape.
So they're being cautious and transparent, which is a good sign. It seems like they're navigating a pretty complex environment, but they're doing it strategically with a clear vision for the future.
Yeah, definitely not shying away from challenges, but addressing them head on while keeping their eyes on the prize.
All right, so we've covered a lot of ground here, from their financial performance to the upcoming R2 launch. Clearly, Rivian is making some serious moves in the EV space. Definitely one to watch. Now, before we dig into some of the finer details, let's have a little fun with our This Is Not Financial Advice segment. If I were a betting person, which I'm totally not, I'd say keep an eye on that software and services segment. What do you think? Could they spin that off into a separate company someday?
Ooh, that's an interesting thought. It's not out of the realm of possibility, especially with how profitable it all is and the growth potential there. It could be a way to unlock even more value for shareholders.
Right. Or maybe even start licensing their technology to other automakers, becoming a key player in that whole EV software and self-driving landscape. The possibilities are pretty exciting, wouldn't you say?
Absolutely. They're definitely showing they've got the tech chops, and that could be a way to leverage it even further. But of course, this is all hypothetical.
Of course, just some food for thought for our listeners. Remember, everyone, this is pure speculation, not investment advice. But it's always fun to think about the what-ifs and the different paths a company might take.
It definitely keeps things interesting, and that's part of what makes following a company like Rivian so fascinating. They're pushing boundaries, challenging the status quo, and it'll be interesting to see how their story unfolds in the years to come. It really is. What's also interesting is their focus on brand strength and customer loyalty.
Yeah. 2 years in a row now, they've been topping the charts for customer satisfaction. And how likely people are to buy another Rivian, that's pretty tough to do, especially with so much competition out there.
Yeah, it says a lot about the whole ownership experience. They're not just, selling cars, they're building a community.
It's like they've tapped into something, I don't know, like a shared set of values or something. It's
Right.
more than just the product itself.
Totally. So back to the financials for a second. We talked about their progress towards profitability, but they did report that adjusted EBITDA loss of $207 million for the quarter.
Right. Not quite in the black yet,
Yeah.
but definitely heading in the right direction. What are some key takeaways from their financial performance?
Their cash position is super strong. Ended the year with $7.7 billion in cash equivalents and short-term investments.
That's a lot of cash. Gives them a lot of flexibility to, invest in growth and handle anything unexpected.
Exactly. And then there's the Department of Energy loan, which could be worth up to $6.6 billion.
That's game-changing money. Gives them a massive runway to execute their plans.
And speaking of plans, that 2025 outlook is, well, there's a lot to be excited about. They're projecting those deliveries between 46,000 and 51,000 vehicles, including the R2.
Yeah, the R2 is going to be huge for them. It's designed to be way more affordable than the R1, which is key if they want to reach a wider market.
Makes sense, going for that broader audience. But didn't they mention a production shutdown to get ready for the R2 launch? Yeah, they're planning to shut down the normal factory for a month in the second half of 25. Seems counterintuitive, but it's actually a strategic move, makes the transition to R2 production smoother and more efficient in the long run.
So it's like a strategic pause, not a setback, shows commitment to, getting things right.
It does, and it's not just about selling cars, right? Remember, those multiple revenue streams, particularly that software and services segment.
Right. It's more than just cars. It's a whole tech ecosystem. What's the latest there?
Well, that software and services segment, it's already a success story. Honestly, 28% gross margin in Q4. And it's on track to bring in over $1 billion in revenue in 2025.
That's huge. What's driving that growth?
That joint venture with Volkswagen is a big factor, brings a ton of expertise, resources, global reach. All of that helps them develop their software and tech platforms faster.
A smart partnership sets them up for success in, such a fast-changing industry.
Absolutely. Now, of course, they're not without their challenges. That regulatory environment, it's always evolving, always something to consider.
Right. All those policies around incentives, tariffs, trade agreements, they can change quickly. Creates a lot of uncertainty.
Yep. So they're being proactive, they're watching those policies closely, and they've actually factored in potential impacts into their financial projections.
So not just crossing their fingers, they're taking steps to manage those risks.
Exactly. They've built in a buffer of hundreds of millions of dollars into their 2025 guidance, just in case.
Prudent, for sure. Shows that they're, committed to transparency with investors.
It does. And, speaking of transparency, their commitment to that vertical integration, especially with the software and self-driving stuff, that's another key takeaway here.
Yeah, they're not just putting cars together. They're investing heavily in developing their own proprietary technology.
Bold strategy, but it could give them a big advantage down the road.
Right. They're in control. not relying on someone else for those key components.
Yep. And that ties back into their whole vision of being, more than just a car company. They want to be a leader in the mobility space, the whole ecosystem.
Ambitious for sure. But they seem to have, well, the talent, the resources, the drive to pull it off.
They do. And that brings us to our favorite segment, This Is Not Financial Advice, where we let our imaginations run wild with some trade ideas.
Let's get speculative. So what if, down the line, Rivian decides to spin off that software and services division into a separate public company?
Ooh, that's interesting. Would definitely make some headlines. Imagine a software and tech powerhouse born from an EV company.
Investors would be all over that.
It would really show the value they've built beyond just making cars.
Like Tesla spinning off autopilot or Apple spinning off their services could unlock a ton of growth shareholder value.
It's a scenario worth thinking about, but of course all hypothetical.
Purely hypothetical, just having some fun, exploring the possibilities. But who knows, maybe someday our wild ideas will come true.
Anything's possible in this world.
All right, we've covered a lot in this deep dive into Rivian's Q4 2024 earnings call. They've hit some big milestones, they're executing on a bold strategy, and they're facing the future with confidence.
Definitely a company to watch. They're pushing the boundaries in the EV space, and their story's just beginning.
Yeah, it's amazing how far they've come, in such a short time. And those production targets for 2025, pretty ambitious.
Yeah, aiming for 46,000 to 51,000 deliveries, R1s, R1Ts, and of course the R2.
That's a big jump. But they did mention that 1-month shutdown at the normal factory, right, to get that R2 line integrated. I think they'll throw a wrench in things.
It's a trade-off, really. Short-term hit for long-term gain. Making sure that transition to R2 production is smooth, sets them up for better efficiency down the line, more scale.
So a strategic pause, not a failure. And it shows they're thinking long-term. Now, what about their financial projections for 25? They're expecting what? Modest gross profit for the year, driven by that strong software services performance.
Right. That segment's becoming a real powerhouse. Over $1 billion in revenue projected for 25 from software and services. And a good chunk of that's coming from that Volkswagen partnership.
That joint venture is really paying off, huh? Gives them access to so much expertise, resources, really pushing their growth on the software and tech side.
Definitely. And it fits right in with their whole vertical integration strategy, right? They're not just outsourcing, they're building those capabilities in-house.
Smart move, gives them more control. So they're projecting an adjusted EBITDA loss between $1.7 billion and $1.9 billion for 25.
Mm-hmm.
How should we interpret that?
Well, got to remember, they're still young, still growing. They're putting a lot of money into R&D production, expanding into new markets. So a loss isn't ideal, but it's not surprising given their plans are pretty ambitious.
And they do have a lot of cash to back those plans up. Ended 2024 with $7.7 billion, plus that potential $6.6 billion DOE loan.
Right. They're in a good spot financially to, handle whatever comes their way. But, there are always those external factors, like that regulatory landscape always changing.
Right. They talked about the uncertainty around those incentive and tariff policies. How might that shake things up?
They've already factored in some potential impacts. They're not ignoring the risks. They're keeping a close eye on things and adjusting as needed.
So proactive, not passive. That's good to hear.
Wow.
Seems like they're striking a nice balance between, shooting for the stars and being realistic.
I'd agree. They've got a big vision, but they're also grounded, taking steps to manage those risks. That's how you succeed.
Well said. All right, last call for our This Is Not Financial Advice segment. What if, down the line, Rivian takes their battery expertise and launches a whole energy storage business?
Ooh, now that's an interesting thought. Could be supplying homes, businesses, maybe even whole communities with those Rivian battery systems, tapping into that renewable energy market, which is booming.
Rivian powering our homes, our businesses. Wow, that'd be something, wouldn't it? Really fits with their whole sustainability focus and a great way to diversify their revenue.
Yeah, puts them right at the forefront of that clean energy movement. Who knows? Maybe we'll see Rivian Energy someday.
I like it. But again, folks, this is all just speculation, not investment advice. Just us, exploring the possibilities.
Right, thinking outside the box.
So on that note, we'll wrap up this deep dive into Rivian's Q4 2024 earnings call. They're innovating, they're disrupting, they're really changing the game in the auto industry.
Yeah.
Definitely a company to keep your eye on. Their story's just getting started.
It is. And as always, do your own research. Talk to a financial advisor before making any investment decisions. Until next time, happy investing.